Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Good morning, guys. How's everybody doing? So we'll go over all the markets today. Dollar index, all right, we traded down into this volume imbalance here, and we've got this nice rejection. So we'll see how this market's going to shape up. But if you guys have been following the stream for the last few weeks now, I mentioned to you that I was looking at these levels here. So we have this candle up here that doesn't have a wick. And we have this candle that's here that doesn't have a wick. And when we were trading around here, I mentioned I'm not sure which one we're going to trade to, because usually I like seeing one or the other. Obviously, we traded down to the one that doesn't have a wick, and then we got this nice rejection. So this is something that I've studied for many, many years, is find these higher time frame candles that don't have wicks and just see how the markets sometimes gravitate to them. They don't go there straight away. As you guys can see, that there was weeks before we actually went and tapped that level. But with these levels that are in place in the market, sometimes it takes a long time to trade to those levels. That doesn't mean that your trade idea is wrong. It just means that the timing of your trade could be wrong. And what I think most traders don't realize is that they can be wrong about their analysis. Like, just because you have an opinion of the market does not necessarily always mean that it's going to come to fruition, at least not right away. And if you guys followed me on Twitter for some time, years ago, I think this was like 2 years ago, or maybe it was last year. Yeah, around last year, January, or maybe it was 2023. I'll have to go back and find that tweet. But I mentioned that I was looking for these equal highs. Now, look how many months it took to actually get there. We didn't hit that level until January of this year. So just because I have this target in mind doesn't mean that it's going to go straight there right away. You just have some type of idea of what the market's doing, what time. The time aspect of it is really the hard part. So where do we go from here? So obviously we've traded down lower here, and now we have some levels that we could watch in here. So we have these two down close candles. This is possibly our order block or change in state of delivery. And we're possibly waiting to see, do we trade up into this fair value gap and then maybe to the external range liquidity all the way up here? All right, so we have this fair value gap that's next. And then we have the high all the way up here. So until we lose this level, I would remain long on the dollar and short on the euro. Now, I did want to see euro go higher, but this fair value gap here is sitting in quite a bit of a premium. I believe it's above 50%. It's right at 50% actually. So where we go from here is kind of a coin toss for me. So we'll see if this bullish fair value gap is respected. If it flips and trades lower through the gap, then we'll possibly target this fair value gap and then the low down here. As you guys can see, we've taken out this swing high and we got this nice swing failure on the daily. This day here ran out this previous day's high and then traded lower. So for the time being, the euro is bearish. Pound has kind of been sideways. New Zealand dollar has been rolling over. Australian dollar, not as weak as New Zealand dollar. New Zealand dollar looks quite weak. And dollar CAD, we have a bunch of equal lows down here that we haven't traded to yet. So just be very cautious of that. I mean, let's say if the dollar trades up into this fair value gap, it's still, let's say we get a rejection. we're going to be still creating lower lows and lower highs. So any bullishness definitely needs to be proceeded with caution. Okay. Going over to Nasdaq, I was initially bullish on this day. Or actually, I was bullish up here last Friday, but obviously that completely changed at the open. So we got this hourly fair value gap last Friday, and then the market really broke down, and we're seeing a soft index market for the time being. So at the open, equity open, right, 9 a.m. going into 10 a.m., we got this nice bearish engulfing candle. And then we got this break lower, taking out what? The liquidity down here, which I did mark out for you guys also. I marked out this liquidity, but I also marked out the liquidity up here. So when we were trading in here, this was more of a coin toss for me as well. What camera am I using? It's a Sony. It's a Sony A6400. So looking at this, right, we've just gotten a closure below the sequence of up close candles. And this market is struggling quite a bit. You know, this level in here, I mean, this is obviously a major sell-off. But we did run out this liquidity and we got a nice pump higher yesterday after CPI. So I'm more 50-50 on index markets. We'll see what the 4-hour does, but we are trading into a 4-hour bullish fair value gap at the moment. Gold. I think you guys want me to look at gold, but gold is pretty sideways. I personally don't have a great read on gold. If I remove all this right now, right, we have this liquidity that was ran out. And yesterday it closed bearish. So it might have, you know, it's probably going to have a hard time trying to create new all-time highs for the year. But right now, this market is very sideways. Nasdaq. You know, keep your eye on this bullish fair value gap. Now, yesterday was a pretty large expansion higher. If we get a nice strong wick, and we get a nice wick closure at 10 a.m., then maybe you want to possibly position yourself long. But for the time being, right, this market is creating lower lows, lower highs. But definitely one level that you want to keep an eye on is all this liquidity that's still up here, right? And maybe we just came down to take out this candle that doesn't have a wick, right? This last 4-hour candle doesn't have a wick. And then maybe we get that rejection higher. Right, because we have this closure above this down close candle here. Which, for bears, that doesn't look good, right? Gold, for me, is sideways. I personally will not be trading gold. Because I don't really see any levels in here. I don't see any fair value gaps that I would look at. I don't see any liquidity raids that really catch my eye. So this trade for me is more 50-50. And also, I'm not a gold trader, so, you know, I don't have an expert opinion because I'm not an expert gold trader. What if it goes to the order block ME? I'm not sure what ME means. And takes the high to go lower. On which asset? NQ? Oh, mean threshold? Yeah, mean threshold of this order block. Yeah, I mean, there's multiple levels in here, right? So you have mean threshold of the order block. You have The 4-hour fair value gap. Oh, the bearish order block above. Yeah, I mean, it's going to have a hard time getting through that level. That's why I have this fair value gap marked out as well. But just from an intraday trading standpoint, right? For me, I'll try and trade that 1 4-hour candle or a couple hourly candles. Right, so we traded down into like 50% of the Asian range. So if I wanted to get long, obviously I want to see a closure above the this 4-hour low. When he would shift bearish on EU, it would likely be after this liquidity rate. So we have that old swing high. Then we have this closure through these last up close candles. All right, so we have the closure through those last up close candles. You guys can see how it traded here into this fair value gap. We have a rate on this liquidity here. You guys can see that we keep rejecting these old highs. How do you deal with constantly getting break evened out of trades and the trades run without you? Don't go to break even. You guys typically go to break even because you don't want to take a loser, right? So for the most part, if you are having a hard time, let's say if you're going to break even too early and then it goes without you, maybe just don't go to break even. Like remove that part of your trade management and then see how your statistics pan out. For intraday trading, which time frame is considered as high time frame? So usually if I'm intraday trading, I'd probably use the hourly. So with the hourly, you're just trying to anticipate where the next 2, 3, 4 hours are going to go. Or you could use the 4-hour candle. Right. So for Forex, the 4-hour candle closed at 9 a.m. So sometimes there's that move around 8, 8:30, leading up to the 9 a.m. close. And then for index markets, right, it's 9:30 up till 10, leading into the 10 a.m. closure. And then you're looking for, where you're going to trade for the next 4-hour candle. So let's say if you're trading Nasdaq and you only want to trade the next 4 hours, what you do really is mark out 10 up till like 2. So if you're trying to trade the 4-hour candle, you really only care about what's going to happen from 10 a.m. to 2. All right. And you're just trying to trade this specific window. Right. Then if you drop down, so if I'm trading the 4-hour chart, I'm usually entering off the 15-minute. And if I'm trading the 1-hour chart, I'm usually entering off the 5-minute. What do I want to see to short the euro? Well, I really want to see it the way that we've been trading right now. Like we have this nice run during London. Ideally, we respect us retesting the midnight open. But it's Friday, and we're also approaching a period where we're in a holiday. We're approaching a holiday, and we're approaching the last 2 weeks of the year. But we also have this hourly breaker in here. So you could use one candle or you could use both of these candles. But we have this break lower. We have this order block prior to the run on liquidity, which is here or here. So you have this high being ran out and this high being ran out. We have this hourly breaker. Let's say if you wanted to go short and swing this position, you might want to use the high of the breaker, right? And aim for a 2 or 3R. When you check if we're in a premium or discount, do I use higher time frame or the one that you're trading on? You probably want to use both. So if we're in a premium on the higher time frame, right, you're trying to enter short at a premium on the lower time frame to get in sync with that. You're in a discount based on what though? Because if we draw out our weekly, we're not in a discount. We're in a premium. Did I take any trades this week? Yeah. The best trade that I had this week was on Nasdaq 2 days ago. So I can walk you guys through that trade. So we were trading up here into this bearish fair value gap, and I was waiting for that 10 a.m. close. Just like I mentioned, this was 9 a.m. leading up to 10 a.m. 10 a.m. was a very bearish close. So we traded up to almost 2 standard deviations. And then we get this level here, which I was looking at as our breaker. Now, it didn't confirm the breaker yet, but I was still going short on this retracement here. This is a very shallow retracement because we have the midnight open and we're kind of hovering around the midnight open. I entered short and then we targeted previous day's low. Yeah, when I'm trading, I always have a target in mind. Where do I put my stop? Let's go over here. So here, this is leading up to 10 a.m., right? If you guys can see my time. So I went short and I put my stop loss in this 5-minute fair value gap just because I was pretty confident that we weren't going to trade up to that level again. But I went short here, put my stop right around here, and targeted previous day's low. So that was almost a 3R. Well, ask yourself, if you have 2 conflicting 4-hour biases for intraday, what would you do in that situation? What would you do? I want to ask you, what would you do? What's the most logical thing to do when you don't know which way the market's going to go? Force a trade or just don't trade? You force a trade or would you not trade? Yeah, don't trade. Don't trade. If you have 2 conflicting biases, you just don't trade. Maybe that's like a foreign concept for you guys, but you have to learn how to not trade. My settings are basically default. I don't really change anything in here. All you're looking for is the Asian range to be the right time, right? So this midnight line has to line up with midnight. So I set my time, right? If I'm trading in New York, because I'm on the East Coast, this is set to UTC -5. So I get the Asian range. I have 2 standard deviations being shown. And then I have my midnight line and weekly open line. That's it. Mike and Christian are killing it. Yeah, man. Some of my students are really good. I would say some of my students are even better traders than I am. But what separates me from some of those guys? I just trade bigger size, and I trade my conviction setups bigger size. That's the only difference. Some of their stats are probably better than mine. Yeah, I just use the bodies of the candles. I don't respond to Discord DMs. Yeah, I apologize for that. I probably have 1,000 people that wanna DM me, but I don't know who they are. So as I mentioned, we're looking at that hourly breaker to possibly send this market lower. And if this weekly candle closes like this, right, we're going to have a very large possible swing high. So this would create candle 2 of possible swing high. Maybe candle 3 next week sends us lower. And the dollar, honestly, the dollar has been stuck in this range for a very, very long time, guys. Usually no, I usually don't open trades before 9:30. At least not in index markets. So we just took out that previous day's low down here. So I would still be cautious of trying to go short. Ideally, you would have been short yesterday. Right? So we have this hourly inverted fair value gap. And ideally, you would have went short in here, targeting Wednesday's low. Oops. New Zealand dollar is just getting smoked right now, guys. How do I solve with dealing with the fear of entering trades? You just have to get comfortable placing risk. You have to be comfortable. If you take that trade You should not be fearful of taking that loss because you're going to have losers in your trading career, and you're going to have a lot of losers. Now, you got to be careful here also of going long because we are trading up into this inverted fair value gap. Bullish setups yesterday? No. Why would I not look for bullish setups yesterday? What was our swing high point? This here is a swing high, right? Taking out a lot of liquidity. So usually the fourth candle after a swing point is continuation. But if you get a swing high, right, this rate on previous day's high is just taking people out or putting people into the market, manipulating them into longs, and then it trades lower. Right, so you guys can see here, CPI takes out previous day's high, and then it closes back low. And then the next candle closes lower, and then it continued lower. You're always conflicting bias, not macro, but daily bias. Well, if you keep switching bias back and forth, back and forth, back and forth, then you really don't know where the market's going. Either you don't have enough screen time to understand which direction the market wants to go, or you're letting intraday price action throw you off. Because a lot of times intraday price action can be noise. It can be very noisy. But then by the end of the day, you're like, oh, you know what? I was bearish. I should have stayed bearish, even though we got a massive candle here. So when I sit down in front of the charts, again, I make sure that I flag these in the direction that I'm trying to trade. And if I don't have an idea, I'll flag it like yellow. And that just tells me that the market's neutral, or at least for me, it's neutral. Oh, because of the bullish fair value gap. I mean, there's nothing wrong with that either. But if it's not panning out in the direction that you want to go, then maybe you just wait. Maybe you wait to see if there's an actual response away from this daily fair value gap first. And what would a response look like? Well, we need a bullish candle. And I'm okay sacrificing some days because let's say if you're trying to be bullish, right, at some point, and we're trading down into this fair value gap. Instead of you going bullish on these days, why don't you wait for a bullish candle? At least this day, right, closes bullish. And then the next day closes bullish. And then the following day closes bullish. Bullish, 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 bullish. Right? I would say it's much easier to wait until you get that daily candle. And let's say if you give it one attempt, maybe you just take one or two attempts in a day and then wait for the daily closure. If the daily doesn't confirm the direction that you're trying to go, then you wait until it does, until you get a bullish candle. Because you don't need to be in the market on this day long, right, to take advantage of the long. You can get long the following day, right? Because the following day, you just trade back down to this daily high here, right? And then you're trying to position yourself as this candle's going lower, maybe, to take advantage of that run higher. Hey Jade, I want a lock trading view on no news days and pre-NFP day. Is there any app? The app is called Discipline. That's the app. It's a personal development app that you install in your brain. Okay, if you're trying to not trade on those days, that's what you do. You got to build discipline. So maybe if you want to get short, maybe you want to wait for closure back below this old swing high. If you're still bearish on the dollar. You know, I would say if you're bullish on the dollar, it's probably not the best time to go long it because we're already above the previous day's high here. This previous swing high. Yeah, the app is free. The app is free. So I think this is going to be quite interesting because we ran out the previous day's low and we're not getting any follow through. So maybe this low down in here was like the final liquidity raid. Took out these lows down in here and then maybe it turns around today. Right? You have a trade in Aussie dollar? Not at the moment. Start trading down to weekly fair value gap. No, I don't trade crypto. Every now and then I do. So leading up to the 4-hour close, you know, I would be interested to see if this hourly candle does reject this old low down here. Yeah, of course I look at the gaps. And if we go to the regular trading, right, there's still this gap here that could be filled. How can you start as a beginner? Well, find a system and a strategy that is easy. Do not try and learn too many things. Find something that really resonates with you. For me, ICT really resonated with me because it was just strictly based off of price action and no indicators. It was just strictly candlesticks. And then just stick with it. You know, your strategy doesn't need to have a high win rate for you to make money. Because for me at least, the skill sets that gave me the most alpha in my strategy and created the steepest P&L curves was more so risk management and trade management. When I could learn how to take advantage of moves in the market and learn how to limit my losses, right? So not have outsized losses. Yeah, I think my videos will help you. I mean, that's the whole point of me putting the videos out, is that I'm trying to share all my experience. I have different size risk on different trades. Some trades I feel more confident in. Yeah, I mean, the markets are the markets. I mean, trading different assets doesn't change the fact that you're still looking at candlesticks and you're still looking at the same time, the same time data. A weekly candle is a weekly candle. A daily candle is a daily candle. An hourly candle is an hourly candle. And the markets are moving up and down. Right? So for me, it doesn't really matter what asset I'm trading because they all move very similarly. When I look at a chart, I look, chart is a chart. If this closes bullish, I would probably just aim for either the weekly open or Thursday's high all the way up here. But you'd probably have to hold it over the weekend because I don't think it's going to trade all the way back up to here. And even if you don't want to go long, maybe you want to wait to see if this daily candle respects this daily fair value gap. Because if this thing does turn around, you will still have time to get in sync with longs to go higher. Because if it goes higher again, you're probably going to try and target this old swing high up here. And how long is it going to take to get there? It's going to take multiple days to get there. So we got a really nice 30-minute pin bar here, right? Taking out that previous day's low. And it's really struggling to go lower. If you get the daily direction and weekly right more often than not, then trade the 4-hour and the 1-hour because you're trying to determine the weekly range, right? So if you get the weekly range correct, you can trade the 4-hour time frame, right? Because there's a lot of good trading setups on the 4-hour. Yeah, it's the daily closure. For me, it's always the daily closure. Yeah, so that playlist on my YouTube channel, if you guys watch that, I get comments. People are like, there's nothing new here or whatever, or this is too simple. What's wrong with simple, though? Simple is repeatable. If you have too many moving parts, trading becomes very difficult. I mean, when you're doing a backtesting session, I would say you're trying to get as much data as possible. That's going to make you confident in the strategy. Maybe that's 1 month of data. Maybe it's 2 months of data. Maybe it's a year's worth of data. The whole thing with backtesting is that you're just trying to repeat something for a long period of time to understand the edge behind it. And let's say you go through a full backtesting session, you see that you lose 50% of your trades, but you're still profitable at the end. That's what you're looking for. To me, I don't really care what my win rate is as long as I'm making money at the end of it, right? And that just gets you comfortable. It gets you comfortable with seeing losing trades. Yeah, kiss. Keep it simple. Stupid. I think kiss means keep it simple, stupid. What's harder trading? What's harder, my trading or managing a personal brand? To be honest, managing a personal brand's harder. Trading is simple. I mean, it doesn't really, or at least it shouldn't require too much. And if you're trading, shouldn't require too much energy. If you're expending a lot of energy trading, you probably need to look at your systems and your processes, because it should be boring and repetitive and emotionless, or as close to emotionless as you can get. When it comes to personal brand, there's a lot of work that goes into that. I mean, there's not to say that there's not a lot of work that goes into trading as well, because it does require a lot of work. I think it's harder to trade currencies, right? Because currencies are meant to be stable. And for me, the best currency trades happen when, unfortunately, there's a lot of chaos in the world. Like, I keep going back um, to the example of the Ukraine war starting. Right, so back here, it was all the way back here. This is really when the Ukraine war is going on. All of this. And that was driving a lot of headlines. You guys can see this trend lower. Unfortunately, you need something like this to really get a large trend in currency markets. Or if you look at the dollar yen when they were hiking rates, right? This is when they were hiking rates. Like, look at this massive mega trade here. Because the Bank of Japan kept their rates the same. Meanwhile, the dollar is hiking their rates. Or sorry, cutting their rates. Or no, my apologies. They were hiking their rates. Right? So when they hike their rates, what does that mean? It means that government bonds are paying out a certain percentage. So if the US rate, let's say it was, I don't know what it was when it started. It might have been like 2% or something. And then they hike their rates to, let's say, 5%. Where are institutional investors going to park their money? In Japan or in the US? Because the Bank of Japan rates were like 0 for a very long time, and they're still one of the lowest. Right, and this is why you get the lift in the dollar. How often do I experience coming close to a 3-to-1 trade and reversing? I'd say kind of often. What's my next goal? That's something that I've had a hard time trying to figure out. For me, the biggest thing is to try and scale up at this prop firm in Chicago, because the opportunity that they're giving me and the amount of capital that they'll give me, I'll likely never have to trade retail prop or personal ever again. And then obviously try and help more traders. I think that's a big motivator for me. I mean, I could have stayed private as a private trader for the rest of my life. But once you go full-time trading, you're going to realize, like, unless you're an extreme introvert, there really is no purpose. You don't have a deep purpose when you're trading. You're just trading to make money. But you're not adding any value to society. And, like, over time, I just, I got demotivated by it. How do I identify low probability? Well, when I don't have a clear idea of which direction the market's going to go. Well, let's just take a look at the central bank rates. They have it over here. I mean, look at the rates. There's still a rate differential. So you see dollar, 3.75%. Yen, 0.75%. There's still a differential there. So people are more willing to park their money in dollar than yen. What's my best advice for a break-even trader? Probably one of the simpler things where you don't have to change too much is filter out the losing trades. I mean, I'm sure if you're a break-even trader that you're still taking trades that you shouldn't be taking. Now, if that's not the case, which I doubt, I doubt that you're not taking trades that you shouldn't be taking, then learn how to manage the risk better. Learn how to exit your trades when you're in a profit, trail your stops, partial, scale into trades. Yes, I use interest rate differentials. I think it's very important to study interest rate differentials. I'm waiting to see how this 4-hour candle closes. Would I ever short dollar CHF? Probably not. Now, interest rate differentials don't paint the full picture. It can just be used as a guideline. It doesn't necessarily mean that the market is going to go higher. Because even if the interest rate is different, there's a big gap in the interest rate, there might be other factors at play. So when you look at the interest rate differentials, the technicals still have to align with it. If the technicals don't align with it, then no. No, I'm not taking any trades until equity open because I'm focused on index markets, and I'm probably going to be focused on index markets all of next year. So I wait for the equity open. I'm not going to be on here when the market's open, but why most traders take a break in December? I wouldn't say all traders take a break in December, but you got to understand. What do you think people that are trading large amounts of capital are doing? And people that are trading institutional funds that have very large positions or want to have very large positions. A lot of times they're trimming their positions into next year and they're going to try and reposition the following year. Yes, I live trade in my private group. So in the next hour and 10 minutes, I do want to see if this 4-hour candle rejects this low. The whole idea is you're trying to trade like an institutional trader, and you're trying to, obviously avoid certain landmines in the market, which can oftentimes be news events and certain months of the year. Yeah, I mean, if you've been trading for the whole year, you should give yourself a break. Give yourself a break. Write down some of your goals for the following year. How many days per week do I live trade with my group? Well, starting next year, we're going to be live streaming 5 days a week. I have coaches that also live stream that are really good traders. The trade's very similar to me. Do I go long? I'm waiting until the equity open, guys. So if you're an intraday trader, you're just trying. All you need to do is capture the next 4-hour candle. For me, that 4-hour candle, I have a better idea going into 10 a.m. because I'm trying to trade from, maybe 9:50 all the way up till 10 a.m. Or sorry, not till 10 a.m. From 10 a.m., that 10 a.m. candle closes at 2 p.m. But you're really trying to take advantage of like the first 50% of the next 4-hour candle. So from 10 to like 12. What do we expect next year on my YouTube? Honestly, more of the same. More of the same, because trading, for me at least, trading has very little to do with actual trading strategy. I feel like I'm more of a psychologist than anything because I know typically what holds most traders back. And I've had this discussion with, my mentor in Chicago. Once you have the basics down, the rest comes down to your execution of the basics, which is why you can have a profitable strategy, give it to 100 traders, and probably 80 to 90 of those traders are going to fail with it because they haven't accepted the fact that trading is more of a personal development journey than anything. Because it's not easy to go into the markets and lose money and be okay with that. Yeah, so as I mentioned, we took out the previous day's low, and we're about to get a nice 4-hour bullish closure. So if you're trying to trade that 4-hour candle from 9 a.m. up until 1, maybe you want to see a nice little retracement here, 9 a.m., and then position yourself long to try and trade higher. Right, for me, this is a nice bullish hourly engulfing candle after taking out a level of liquidity. No, it's not 100% tuition. That's not. You use some tuition, but when it comes to analyzing the markets, a lot of it is just very logical. So based on swing points in the market, based on time, I come up with trade ideas. And the thing is, I'm totally okay taking trades that don't pan out because I keep showing up and doing the same thing every day. Thanks for sharing your story in a video. I watch it almost every morning. I've got another story video coming out this weekend, which kind of dives deeper into my whole journey as a trader. Well, for me, a lower low, ideally you get a closure below the low. That to me is a lower low. Because I'm still interested in seeing if this daily fair value gap is going to be respected. So with lower lows, I'm looking for closures through the low. That to me is a lower low. If it takes out a low and rejects, that's not a lower low for me. Because look, every time here, right, even though it pokes out the low, it doesn't close below the low, and then it just completely turns around and rips. Right, so closures, for me, create the lower low. But if this takes out the previous day's low and doesn't close below it, that to me is not a lower low. That's a sweep. Now, if this thing turns around and then closes down here, okay, then we're not accepting the low. It doesn't have to be on the same candle. It can take time before it actually rejects away from those levels. Like gold was a really good example because I showed you guys two different examples down here, right, of these bullish fair value gaps. It doesn't have to reject on the same candle, and you don't know how long it's going to take to reject, but eventually it does, right? It trades down into this fair value gap, goes sideways, and then rejects and takes out this liquidity. Same thing here. Trades down to these levels in here, and then rejects and hits this high. What's the best time to trade Nas 100? For me, 10 a.m., like the AM session. So AM session for me is 9:30 up till like noon. But I'm usually not taking any trades in the first 30 minutes. Well, I want to see a rejection from this fair value gap, right? But I don't know where this candle is going to close because there's still an hour left. Now, if the market opens and it trades through this and closes through this fair value gap, then my bullish bias is off the table and I would lean short. Right? Because again, I'm just trying to anticipate what's going to happen on the next 4-hour candle. Here was a good example. This candle here closed at 10 a.m. A very large bearish engulfing candle rejecting this fair value gap. All you're trying to do is position yourself inside here when it's making the high, holding to this previous day's low. And then it closes bearish. And maybe you're trying to come to the PM session and do this, operate the same way. You're trying to anticipate that next 4-hour candle. Trades higher, position yourself short, and then it closes lower. Do I use the weekly profile? Yeah. YM. Oh, YM got this rate on liquidity, and then we got a nice displacement higher. So you ideally want to see this down close candle being respected. No, I usually don't trade a lot in December. I usually don't. No, I don't have different weekly profiles. And here's the thing about weekly profiles is that it's not just black and white. It's not just like see a weekly profile, or you're just trying to anticipate a weekly profile. That doesn't mean it's going to come to fruition. So I'm still interested to see if we reject away from this daily fair value gap. Again, you don't have to get in it today, but if we reject and this closes higher, like a nice bullish candle, then maybe next week we can get long again. But for the time being, this last 4-hour candle is bullish, right? We took out the previous day's low. I could see this thing going higher for the time being, just because we're trying to trade that next 4-hour candle. Right, this is kind of showing us, hey, we rejected the previous day's low. We traded below it and rejected it. No, I didn't go to school for civil engineering. I went to school for business administration and finance. But I'm gonna hop off here, guys. I hope you enjoyed the stream. You know, Merry Christmas if you celebrate. I'll be on next Friday going through a recap. And we can, during the recap, we can kind of go through everything that happened on the year, everything that happened on the month, how I position myself each month, and just kind of walk through price action. All right. So hope you guys have a great one, and I'll see you guys after Christmas. All right. Later.